Hemang Jani, Senior Vice President at Sharekhan, joins us live. Hemang, good afternoon to you and thank you for joining us. Hemang, the entire trading action is only concentrated around three stocks: Biocon, Century Textiles and Aurobindo Pharma. Do you track all of them, none of them?
Good afternoon, Nikunj. Yes, we do track Aurobindo Pharma, and it has had a spectacular move, and particularly the recent development about their acquisition in Europe definitely has surprised the market. And there's a feel that given this kind of developments and few approvals that they've got, this quarterly numbers are going to surprise market comprehensively. And still it's available at a substantial discount to some of the large pharma companies like Sun Pharma, etc. So this momentum can actually go up maybe another 10% or so.
So for Aurobindo Pharma, do you think it's pure momentum? Because I'm surprised. 3 months ago, no one liked it. Everyone was talking about FCCB concerns, poor management, overseas debt. But now, nobody's talking about that. In fact, like you said, now the game in the town is that it is trading at a 50% discount to Sun Pharma, so it should catch up. Why has the demand-supply equation changed?
Well, clearly, this stock had its own set of issues, and in the last about 4 to 5 months' time, we have seen the transformation happening, and the last two quarterly numbers have been pretty good, and because of the stability in the rupee, that FCNR-related issues also have actually gone down. So now there's a sense that there is a revival in the business. The management is doing its bit, and it's available at a discount. So market is looking out for these kind of ideas. So we think that this momentum can actually take up by another 10% or so.
Hemang, I don't know if you've got a chance to take a look at HDFC's performance. While the numbers look in line, the problem really is with the stock being so perfectly priced.
Absolutely. The numbers are pretty much in line with market expectations. In fact, the bottom line growth, doesn't look that great, given the fact that in the past many quarters we have seen a growth of more than about 20%. But given the stability and the kind of quality that it commands, I think the stock will remain stable.
Hemang, last week or in last 10 days, the key numbers which have come out, be it IT, banks, they've been above estimates. Now is the tough part, because the second leg of the earnings season is always reserved for manufacturing companies and PSU banks. So after the initial earnings surprise, are we in for some degree of result disappointment?
Yes, to some extent what you're saying is right. Even in the past couple of quarters we have seen the same trend, that initial few numbers from IT, pharma and a couple of media stocks tend to be good. But from the manufacturing side, the capital goods sides, and infra and PSU banks, they tend to disappoint. But good thing around this quarter is that we've seen a mixed trend as far as PSU banks are concerned. So there might be some positive surprises in certain pockets, particularly banks like Bank of Baroda and PNB. So we think that that should definitely be good. And a large part of the negativity which we have seen for the last 2 or 3 quarters, I think is pretty much known. So market would look out for some kind of a direction from the management about what they see over the next 2 or 3 quarters.
L&T then, Hemang, it should be out any second now. What's the expectation?
We are looking at a growth of about 11 to 12% on the net profit front. The margin is likely to be around 9.5, and the order inflow could be in the range of about 30,000 crore.
Which means you expect L&T to beat their guidance?
We think that even last time around there was an element of surprise as far as the order inflow is concerned. So this time around we think that the numbers would be slightly better than the consensus.
Hemang, appreciate your time. I'm glad you could join us on this edition of Markets at Lunch.